Let's start off with a look at the market's performance yesterday and what's expected for the trading day ahead, of course, as we wrap this week up.
Well, if you're asking for what's happening the trading day ahead, it's quite difficult at this point to say what will happen. We typically see some profit taken towards the end of the week, and we're just about there now. But given the trend we've seen in the last 2 days, I think one could also speculate that we could see further gains. Axis Bank, as you know, reported earnings about 2 days ago. I think that was a big catalyst for local equities. And as you're probably aware, the Fed also introduced further quantitative easing yesterday, and I think that could also serve as an inducement for equities going forward. So we're quite optimistic on the market generally. I think that there also pretty strong improvements in local reforms, which also serve as a pretty strong catalyst for equities for the rest of the year.
Of course, amongst those companies that have released results this week, we've got Dangote Flour. Dangote Flour posting a 90.4 million naira loss in the first 3 months through to 2012. That's compared to a 487 million naira profit before tax in its comparable period in 2011. How did the market digest those numbers? And let's go through some of the pressure points that this company is experiencing.
Well, the response has been relatively muted, and I think that's because of the ongoing discussions between Dangote Group and Tiger Brands with respect to, probably buying that asset. But if you look at the results themselves, I think it obviously was a surprise for us, slight surprise, and the main culprit there was substantially higher marketing and distribution expenses. To put in context, the marketing and distribution expenses were about almost 100% higher, about the size of what they reported for the full year 2011. And also there was quite an increase in interest expense, but I think that was quite expected.
Taking a look at this transaction that you've mentioned that the markets are waiting in anticipation for, it's Tiger Brands buying into a 63.35% stake of Dangote Flour. Of course, we know that Tiger Brands are new owners of Deli Foods in Nigeria. They've got a 49% stake in UAC Foods, and this all in a bid to increase their footprint on the African continent, entrench itself in Nigeria specifically. With the kind of experience Tiger Brands has had within that foods category in Nigeria, how are investors feeling about Tiger Brands taking a handle on flour mills, on Dangote Flour rather?
I'm sorry, I really can't, I'm not at liberty to comment on that at this point. But what I would say is that the prospects in the Nigerian flour market are quite significant, given the expected evolution in the Nigerian consumer. We've seen, incomes rising, demographics are relatively strong, and this is really one sector, that it represents quite a substantial part of the average Nigerian's wallet. Food in total represents about 42%. So these are sectors that we've encouraged investors to continue to play in, and that's where I think you see sustained growth over the short to long term. Some of the other sectors like healthcare, transportation, communication are probably quite focused on narrow in terms of upside, and that will probably take a longer time. But I think areas like food, flour mills, which you talk about, are relatively strong, and I'm sure anybody who's vested in that sector will do very, very well.
Let's take a look at results expected out today. We're expecting full year numbers out of Guinness Nigeria today. What's your view on that company relative to the kind of sector performance we've seen so far?
Well, we're looking for a decline in EPS that financial year. That's financial year 12. We're looking for about 23% decline. The major issues there were quite a slowdown in volume growth. Input costs, as you know quite well, were relatively high that period. And there was quite a substantial increase in its marketing investments as they sought to drive volumes from the second half of the year. But we do expect a recovery in Guinness. Guinness is a formidable player in the sector with a market share of about 27%. So we do expect a level of comeback. We're excited to see that in the fourth quarter. Diageo did publish some trading update a few weeks ago that indicated that volumes for the full year at Guinness were flat. That too was pointed to about 5% a higher volume growth relative to the third quarter, when we anticipate that or expected that volumes were down about 9%. So I think that pickup was quite encouraging, and I think they can sustain that in coming quarters.